All right. Hey there, everybody. It is a few minutes after 11 a.m. Central Standard Time here on Friday, the 11th of March, 2022, coming at you from a cold front just moved into Bernie, Texas area. I'm Chris Franks with Texas West Capital, and I hope, over the next bit here that I'll hopefully clear up some misconceptions you might have about markets and what's going on, give you some thoughts about things as they appear to be. And maybe some stuff to kind of chew on and think about for a bit. The one thing you have to do, guys, when you're coming into the markets is let go a lot of that stuff that you believe in, because of sound bites. Yeah, man, guys, one of the biggest problems we have as human beings is letting go of sound bites. This is something that's been talked about for 30 years now. The 5-minute sound bite. Right now, it's probably down to a 2-second sound bite. But people tend to only have attention span enough for a soundbite, and then they just go and regurgitate that soundbite, and they have no clue what it means or if it's real or not. And we see a lot of that on social media, guys. I get trolled by that a lot. You got a lot of people thinking that we're going, average people, just people who don't have any real economics education or anything, thinking that we're going into hyperinflation. Guys, let me tell you what. You cannot go into hyperinflation just because you're printing in the U.S., because you're printing dollars. You have to, at minimum, you have to print a significant amount of dollars and at the same time have a decrease in the demand for the dollars. Instead, what we have right now is this liquidity thing going on, this liquidity crunch going on. There is a continually rising demand for dollars right now. And this is not even talking about the euro dollar, guys. Most people, they sit here and we talk about the dollar. I talk about the dollar because it's the easiest thing to talk about, but there's this whole other kind of like the shadow system called the euro dollar, and all that basically is dollars that are held offshore. We call them offshore dollars. The importance of this is it is significant in comparison to our, the dollars that we that the Fed can account for, because the Fed can't account for those. Just like banks create dollars out of thin air, right? That's where your dollar creation comes from, right? Banks loan out. If they have $100 on reserve and they have, or in the deposit, and they have a 10% reserve requirement, they can loan out that 90%, right? And then that keeps doing that. That's that whole fractional banking, right? Well, the same thing happens when dollars head out to banks offshore. They can loan out more dollars, right? To create it through the same way. So there's this whole euro dollar market, if you've got anybody talking about hyperinflation, I can all but guarantee they don't even have a clue what a euro dollar is or what that means or how that's significant. So you know what, guys? Stop worrying about hyperinflation, okay? It ain't happening. Not right now anyway. It'll be a bit off, right? So anyway, there's a little bit of the rant there to begin with. Who's here already? Claudio, good evening. Good to see you. Oscar checking in. Blaze is here. Oscar says, what are my views on Biden's order about crypto? Does this give the SEC the green light to regulate crypto? Same rules, same risks? No, I don't think so. Really, all that executive order did was say, cracked a whip and said, okay, listen, guys, y'all need to start acting together. You need to start working together. You need to find out what are these risks? What are the real risks here? What kind of systemic financial system risks are we going to potentially have? How do we protect, people from these crypto scams? These are the things it's going to do. And it's trying to get these agencies to work together. There's nothing in there that says any particular agency is going to have control or whatnot. Again, this is all about the first steps. This is about getting the information that government wants and needs so that it can so it can put together a plan on how to go about this whole regulation thing. And I'll tell you what, if they're going to be regulated, this is what you want. You want them to at least do some research and figure things out, right? So that's all. That's really all we're at this point right now. It's way too early to say who's going to have control or not. I don't think the SEC is going to. And again, they could potentially just chop it up depending on how how it's issued as to who's going to have some kind of oversight on it, which would be really messy. It'd be easier just to have one agency have oversight on it, but yeah. So that's where I think we kind of are with that at the moment. What's going on, Nevolution? Keith, Hank, what's up, man? Telluride is here. He says, from Mountain Country, Traders of the World. Hey there, Crypto Mowgli. Good to see you. Chris Baker, what's up, buddy? Data checking in. Travis is here as well. Daniel Mendez, Andrew Bennett. Good to see you guys as always. Blaze mentions that Goldman believes we're at a 35% chance of recession so far. JP cosigns, yeah. Everybody's kind of coming into that now. We've had this a pretty big drop. Like I showed you guys, I think it was earlier this week. It might have been the last week. I think it was Tuesday. You know, the NASDAQ composite's down over 20%. That's technically a bear market, right? It's a drop of 20%. We saw that the Dow and the S&P, though, were not there yet. They're, you know, about 12 or 14%. So, of course, the NASDAQ itself is driven by those tech companies just sucking up, you know, just sucking wind, right? And that's why it's further down than the other two right there. It's the same thing we've been talking about prior to the top. You know, I kept telling you that as we got toward the top, you know, it was the tech companies that were leading. So the NASDAQ was leading the pull up. And then when it would come down, it would be because of that, right? So here we are, potentially heading into, you know, a recession. And I think if we're going to recession, quite possibly, you know, worse than that. The good thing is, as a trader, you know, it really doesn't matter. You know, the market goes down. The market goes down, that's bad for investors. If you're a trader, it's opportunity. And I think that's the one thing most new traders don't get, because they still think in terms of investing. They still think of the chart moving right and up, right? But if you're a trader, you don't care that, you know, you don't necessarily care that it moves right and up. It could move right and down. As long as you understand what the trend is and you can get in there and benefit from that trend. That's what it's about, right? Let's see here. Excuse me. What's going on, E3 Men? Michael Williams is here. Let's see here. Yeah, Tell Your Runner says the EPA was specifically asked to look at climate effects of crypto. Yeah, there was that little bit in there as well. And of course, you know, the talk of the dollar, a digital dollar. You know, again, guys, those of you that have been with, you know, been following me for a few years here, you know, I was talking about this in this next bull run during the last bear cycle. I said during this next bull run is when we're going to get serious talk about, well, that we're going to see serious, you know, more institutional money coming in, like really institutional money coming in, which we've seen. I said we're going to see a lot more serious talk about digital dollar. That's what we've seen. So, you know, all these things just kind of going along is what we talked about just a few years back, you know, is going to happen. So, yeah. No mooning in here. You know better. Ace J, what's going on? Happy Friday, man. Gold Docker is here as well. No. You say you're joking about the EPA. But no. There is that look. There's going to be that look at the climate side of it. I don't think it's going to be that big an issue, honestly. You know, it's a lot more. I don't know. I think it's a lot more just off the cuff talk than anything else when it comes to that kind of stuff. Let's see here. Yeah, Rico, what's up? Says, is high electricity costs now going to affect miners? Can we expect miners capitulation? I don't think so. You know, I think you would need more of a sustained rise in energy cost. And we'll take, again, a look at oil and everything today. And I think, you know, I think we might have topped out on all that. I think energy costs are going to start coming down here. Natural gas might go up a bit higher. But, you know, as far as oil and stuff like that, and of course, oil powers a lot of that electric out there, right? I think that might end up, that might be topped out. And so, you know, we could see a pullback in that. But miners themselves always sign those, you know, they sign those contracts where they get really cheap rates and they sign contracts for lengths of time, right? So just because it's going up right at this moment, it doesn't mean that it necessarily affects miner electric cost right now. You know, they're often locked into lower rates because they use so much, right? And they sign contracts for periods of time. So I don't think that that's going to lead directly to any kind of minor hiccups here. Minor capitulation at the moment. I could be wrong, but I don't think so. Let me see here. Okay, so yeah. So, hey, guys, listen, we'd love to have you join us here at howtotradetowin.com. We've got a whole bunch of people making a lot of money using these techniques that I teach every Wednesday to our Tier 3 folks. I've added a few to my Twitter feed there for you guys to check out. A couple of people mentioned some stuff. We've got a lot more to add in there when I get a chance. But it's really great just seeing how people are, you know, picking up on these ones that they like. We teach something new pretty much every week. And, you know, and they kind of use that to learn how to enter and how to take profits and whatnot along the way. 180 pips, 60 pips, you know, in Forex and whatnot, you know, thousands of dollars running with Bitcoin, stuff like that. So we'd love to have you there. Just 1 month, man. I'll tell you what, I think after 1 month, you'll be hooked. We have a great, absolutely amazing community of people, guys. I'm just a guy that does a thing. That's really it, guys. I'm nothing special. I'm just like anybody else. I've honed my skill over, you know, an extensive period of time. That's all it is. It's not like that I have to be this grand smart person, to do this. Anybody can do this, guys. It just takes practice and a willingness to let go of the nonsense that we think when we first enter the markets about how things work and the way things work. Once we get rid of that, then we can open our minds to how things may really work. And that's when you start making that money, right? But it's always about the risk management. So if you're not taking risk management seriously right now, then, you're never going to be able to be successful as a trader. You really aren't. Because you're going to lose money along the way. Period. End of sentence. Doesn't matter how long you've been doing it. You're going to lose money. Every so often you are. And you just have to be able to use proper risk management so that you limit that loss. Let's see here. So let's see here. Andrew Bennett says, waiting on next week's Fed meeting. 25 points factored in. 50 points creates a drop. Creates a drop in what? 50 points would be. I mean, everybody, Bullard and a few others really been kind of talking about it. I think we're all but guaranteed 25 at least. CPI came in hot, again here, highest in 40 years. Which again draws the interest of the hyperinflation folks. They get all excited. Oh my God, hyperinflation! We're not even at the inflationary levels that we were in the 70s, and they're already talking about hyperinflation, right? Again, their ideas. They always come back with 87% of the dollars ever created were created since 2008. So water's wet. What's your point? See, this is the thing. People don't know. And it's okay not to know, guys. It's okay not to know. It's not okay to go up there and act like an idiot and look like a fool in front of the world and everybody else because you don't know and you refuse to think or ask questions. Again, you can print as much money as you want as long as the demand is there for them, and we know it's there. We know it's there because, as I was talking about, the liquidity crunch that's going on in these markets, exasperated locally right now by what's going on with Russia. Russia holds what? 360 billion in foreign reserves, something like that. If they take them off the Swiss system, this is all going to create a demand for dollars. Dollars are what grease the wheels of the world's finance, guys. You don't have to like the U.S. You don't have to like the U.S. dollar or whatever. But the reality is, whether you like it or not, it is what it is. So as long as that dollar greases the wheels and makes worldwide financial international transactions happen, which is what it does, there's demand for it. And in times of fear, the demand for it increases. This is why we've got the dollar going up. But again, this is only, we only look at the DXY here, the dollar, but, we can't even really truly understand. Even the Fed doesn't know how much of the euro, how large is that euro dollar market? Nobody really knows. That's all dollar creation that's happened without the Fed's blessing, right? This is all stuff they can't control. This is stuff that happens outside the nation's borders. Which is why the Fed opens up the swap lines now, right? And by the way, I think we may see that happening soon here. To ease the dollar liquidity issue right now, the lack of liquidity that's coming in out there. So yeah, Leo, what's going on, man? Good to see you checking in. Have I looked at the Bitcoin USD shorts lately? Hank wants to know. No, I sure haven't, man. I haven't looked at that probably in a year or two. Andrew, you said 50-point basis hike, maybe a drop in Bitcoin, but Dow, a drop in Bitcoin, the Dow and the index and all that. It's always possible. I tend to play the charts as they are, though, not give a whole lot of worry about that. So we'll see what happens there. What's going on, Esteban? Good to see you. Hank says the Bitfinex shorts are 300% up. Woo! Everybody trying to load in. Everybody wants it to go lower, right? Oh man. Anyway, you guys can join us here at howtotradetowin.com, man. We'd love to have you with us. Just click right here and it'll take you can get signed up. Tier 3 is where it's at. That's where we do our 3 weekly live stream educational things. On Mondays we do education for Wyckoff. On Thursdays we do education for Elliott Wave, and then on Wednesdays is tips, tricks, and techniques, where we take deeper dives into indicators, and we I teach different systems and strategies to trade with. That's what I was referring to earlier, where people are using to do some pretty good profits right now. So come on and join us, man. We'd love to have you there. Like I said, the people we have are just absolutely fantastic, right? So I've gone ahead. I've been talking about this triangle for a long time. I've finally pulled it up. I think I've got this as a primary now. And so this is the triangle I've been talking to you guys about. So basically we get 3 up here, and we've got 4 as a triangle that's forming here, okay? Now, locally, let me get in there locally here. Locally, I think what may be happening here is, and this is, again, based on the idea that we've got, looks like threes, right? So I think what we may end up having here is wave C is done over here back in January, end of January. And then we've got W. So it's an ABC for W. X is a triangle, I think. Again, ABC, 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 ABC. So A, B, C, D, E. Okay, so let me zoom in here again now. Let's go. Here we go. And so then last night we had this nice little rally last night, right? So this rally right here came off of, what is this here? About almost, just over 5%, right? So good little rally overnight. And it appears to be in 5 waves. 1, 2, 3, 4, 5. Let me kind of zoom in a bit more here. Whoops. There we go. 3, 4, 5. And so basically just, you know, your 1, 2, 3, 4, 5 here gets us a 3, a 4, and then 1, 2, 3, 4, 5. And then I think, you know, it looks like we've got an AB here, and we got a C working out. We pulled back about 78.6. So I really kind of want to start seeing it rally from here. It could head lower. This just becomes invalidated if price drops below this swing low here at 38,244. If that happens, I think what we have here then is, so of this wave X triangle, I think this will be like, I think maybe this could be a, you know, so you got D here, and then it would be A. This would have to be a B, and then a C down here to finish out E. The triangle still remains valid as long as we're above this wave C swing low here at about, what is that? Right there around 37, 139 or so. By the way, this is the Femix chart, guys. It's not the Coinbase one I'm usually using. So we'll see what happens here. What I'd love to see right here, you know, where you've got this kind of floor kind of seems like being built right here on support. I'd like to see this rally on up. So if we get a breakout above 39,617.51, that should give us added confidence that 1, 2 is done and 3 is in progress. 3, let me see here. Based on this pullback, 3's got a minimum expected target of 41,817.5. And so that'll then give us a wave 5 up here, right around where the previous resistance is. So again, as I often talk about, your first subwave up generally should target the previous swing high, the previous wave of the larger degree, where it terminates. So that kind of gets us, that 2.0 right there, kind of gets us right there. So, you know, and so 3 gets us right into this bit of a high volume node here. So that's what I'm looking for now. Either a breakout above wave B here to give us that target of 3 up there, or a breakdown below wave X here, which suggests maybe that wave E is still in progress, A, B, C, or W, X, Y. But if that happens, then it has to rally. Wave E has to end prior to this wave C swing low over here. So not a whole lot of, really a lot to think about here. It's just, you know, are we going up through where we need to go here? Or are we going to go down there? The other possibility still remains, guys. It still remains possible that, let me kind of zoom out here a bit. It still remains possible that maybe, you know, that this is some kind of flat correction here. So you have A down, B up, and then you have 5 down here for C. So, and because of the size of this here, let me kind of do this here. Because of the size of this here, the length of time here, this would have to be 2. So it'd be something like an ABC is 1, 2, and then maybe an ABC is 3, 4 is a triangle, and you'll have an ABC as a 5. Now, the thing about that is, it doesn't have to break down. We could have this, you know, this 5 waves down if that was 1, 2, 3, 4, or 3 waves down as a, you know, as an ending diagonal here. You know, it might only get to around this 30,200, 30,250 area. But if it does break down, all I think that would be is just a spring. And I think a good target may be this 26,700 area, which is the S1 pivot on the weekly. But it would just, my thought is that it would just be a wick down and a wick back up. Everybody's ready. Everybody wants it to go down. Everybody's, just, okay, it's going down, it's going down. So, they short it right around that breakdown. Boom, hits it, and then pops back up. Now, there isn't a lot of liquidity, it doesn't seem like, in that area for even that to happen. So, all the liquidity's right here, guys. It's all right here. This kind of area where we're getting stopped here, where we're getting these higher lows here, right? That's where the liquidity actually is. So like I'm saying, if it breaks down, I think it might only get right here and just print a last point of support rather than a spring head up. The other reason we have to think about that is because, with Wyckoff, when you look at it, again, you'll go with your buying climax here, local selling climax, automatic rally, secondary test, and you get this thrust up. And so now you have a higher high. Usually in your accumulation range, if you've got a higher high, it usually results in a higher low. You usually don't get a spring. Sometimes you do, but most times you don't. And so again, if the bottom's not here, then we get that last point of support over here. Doesn't break down. We head back up. And so everybody shorts looking for that to head down, and then it goes up. And then those that want to short here don't do anything. They sit on their hands because they're freaked out because it didn't go down and it's starting to go up, and they're waiting for the dead cat bounce to end so it can go down. And then it breaks out and it continues to break out. They finally jump on it up here when it's already risen, if you get this drop down here, it's already, doubled in price, right? This is the way that retail tends to trade. So, that's where we're going. Now, overall with this range, volume continues to drop off. This really suggests, and where this volume's coming in, especially at the lows here, really seems to suggest this is reaccumulation. Locally here, again, if we look at the volume, let me get back up here. This volume right here, through this kind of sideways, you see this volume's dropping off. And then most especially through this triangle right here, you see volume dropping off until today, which we have this one right here. Well, this is a lot of volume, and it's not really going anywhere. You see that? Look at how small this is. Ton of volume, much larger than anything we got going here, up, other than previously here. But locally here, a lot of volume. The day is, still got quite a few more hours left in it. And this is all we've got so far. So as long as this holds, there's a good chance we're going to see this just rally on up. Nice and good. So we're going to see if that happens. But overall, this whole area screams reaccumulation here. And so even if it was a dip below on a spring for a flat correction, it should just be short-lived. We should head back up, and it'll freak people out. They'll lose a lot of money in that, and then it'll rally the other way without them. And that's kind of what I'm looking at right now. Let me see here. So again, it just comes all back to locally here, what's going on with those, with those thoughts I had about that I mentioned just a little bit earlier. Again, this could be 1, 2, 3, 4. Get a little bit lower here in 5. Definitely possible. You just don't want to see it dropping below 38,244 here, because that'll validate that. Again, it looks like, 5 up. But we want to see it actually working as it. We don't want to just assume, because there's been a lot of false breaks, right? So we want to see that happen. Let me see here. Everybody's loaded for 14,000. Man, I'll tell you what, 14,000 would be such a gift. I'm going to tell you what, I wouldn't even hate. I would be so happy for 14,000. Man, that's less than half of what you got going on here. Such a great price. But man, that's such a far way off. There's so much has to happen in order for that to happen. So yeah. Yeah, three years ago, Bitcoin was around 3,000 or 4,000. It's crazy, right? Yeah, we're through 10 times. Yeah, no doubt, man. No doubt for sure. Let me see here. Let me kind of catch up with you guys. What's the bear case? I don't know. It's like you guys expect that you have to have that bear case just because you have what would you consider a bullish case? I don't believe that kind of stuff. I don't think you have to say, oh, but it's going to be that other side here. Yeah, maybe. But I mean, again, right here, it would have to be a drop below this 28, this 28.8, 28.9, whatever area here, this swing low. And if there's a rally back up, it's going to have to get stopped right here at around 40, this kind of area here. And it'll have to get rejected and go down and stay down. That's the bear case, if you ask me. If you drop down here and you go way back up here, that's a signal that this is, again, probably, that was wave, or I'm sorry, phase C, most likely of reaccumulation there, and we're just headed up higher. You could drop down here, rally back up, and get caught in this kind of area right here, but that's where you would expect to get caught. And then it would have to get rejected and sent back down. And not like take forever, it should be a pretty easy rally up and then a pretty easy rally or decline back down. If you do that, then this is the top. And we head down, and so, the top's at almost 70,000. So again, at that point, you're probably looking at, 15, 20,000 on the decline. I think you look at the previous all-time high, which was that 1920 area. I don't know that you necessarily get below that. If it was to do that. But, we'd have to play it out as it happens there. But again, for me, to have some kind of bearish case, it's got to drop below here, rally back up and get rejected here or here, and then hit markdown, start heading down from that pretty seriously, impulsively. That's what I'm trying to say. Prior to that happening, I think right now, anyway, it still screams higher up. So we'll see what happens with that. Yeah. It's all a step-by-step thing, as price action plays out. Let me see here. Oh, let me see here. Just trying to catch up with you guys. Is 50 points factor in is what Andrew's trying to get me to commit to. No. I think the market in general is 25. I think you've got some outliers that are maybe, might be convinced that 50 is is much more likely than people believe. But I think the market in general is looking at 25, not 50. So yeah, 50 would be a shock. Yeah. Now, would they necessarily send Bitcoin down? Maybe, but if it does, again, I think that just plays out the flat correction. And so either, a last point of support here and then up, or a spring here and then up. I think it becomes more knee-jerk than anything. As with most, news events, right? The CPI release, and again, sent Bitcoin up and down, and everything else kind of up and down, right? So it's usually just knee-jerk reaction stuff, most often from those kind of news events. But yeah. Aswar, what's going on, man? Good to see you here. Let me kind of catch up with you. Whittick, Hex USDC, can you remind me in just a little bit, please? Probably here in about another 15 or 20 minutes or so. Yeah. And then I'll take a look at that. Sure. Coinbase doesn't show which volume. This is Coinbase right here. Are you talking about this local volume here? This one right here? Yeah, a little bit different. Femix, different exchange. But still, showing that volume there. The other volume is still the same. Coming through here. Still a decline in volume here. You see the volume picking up at the lows. That's, this is demand showing up. When you got this coming down at these lows here. At your lows. At your highs, look at how volume is so little at the highs there. Again, look at here. Volume's still much lower than what you have at the lows. So what it tells you, remember, the reason we look at volume and price action is because that shows us what the big players are doing. It's the one thing that they can't hide is their volume footprint. Because they have to buy in bigger lots, right? In larger lots. And no matter how they shake it up or how their bids are going in through the books, the volume shows itself, right? Over time, right? And so when you see the large volume coming at the bottoms, that's them buying. This is the big guys buying. When you see the volume coming in at the top, it's the big guys selling. But you can see all through this range here, volume, these largest spikes of volume by far are right here at these lows as price drops here. And you know, very little in terms of what's going on at the top there. This one again is Coinbase chart right here. Another thing to look at is we are sitting right here on top of this large high volume node right here, which of course was created back here in the beginning of January, over here in, this was January of 21, by the way, over a year ago. Right here prior to the summer, May, June of 21. Right here again in January, end of January this year. And then right here, the dip down here in February. And so, you know, you expect this level to hold real well because as long as you're on, you know, coming down on top of it, this provides support. It's not that this is bullish or bearish where the volume is. It just shows you where is the market most interested in price. And if you're above it, then you come down into it, you expect the market to try and buy. That's where they're interested. If you drop below it and you push back up, then you kind of expect them to sell into you because you've dropped below that level. So, I mean, that's all we're looking at then. Let me see. Duff says, back in 2020, you had indicated that you'd be surprised if we make it to 100K without a dip to 1,200 or so. When you were still looking at the macro expanded flat, it seems it would be reasonable based on your previous theories for us to have topped around 70. Yeah, you know, but that was, again, based on if that played out. Which at the time I thought was a good chance it might. But, you know, again, as we, you know, I never said this is the top and that's it and sell. It was always, okay, well, listen, this is what has to happen. You have to, and if you go through this level instead and you head up higher, well, then, you know, that's not on the books, right? And so, you know, of course, we gave up on that a while back, right? Way a while back, around 30,000 or so. Because that kind of the 30,000 level was really kind of that as high as you really kind of wanted to go as far as an expanded flat would go. Yeah, so once you're getting beyond that, it really significantly reduced the idea that you'd be having expanded flat. So then that's why we changed the count. Changed the count. We used the other count, right? The alternative we had, which is what we're still watching now. Now, could 70,000 be a top? Sure it could. Sure it could. But again, right now within this year-plus long range here, volume is showing up in spades at the bottom still today and not at the top. Again, this in general indicates that the big players are out there buying these dips down here at the bottom. Look at how it's all bought in the same area. You have no real significant selling going on at the tops. And if you're the big guy, you should be seeing this type of thing happening constantly at the tops. But instead you're getting that at the bottoms where the buying is going on. So these are the kind of things that we look for. This is devoid of any narratives, any Elliott Wave, anything like that. This is strictly looking at price action and volume, which is why it's so important. Now, does this guarantee that price is going to go up? No. We could see, heck, this doesn't guarantee that we can't have a spring drop down below that swing low area here, below that range low, and back up, or a terminal shakeout and a back up. That happens. But what this tends to suggest more than not is that the big boys have been accumulating here while retail's been freaking out and getting bored and getting scared and selling. Again, if I'm thinking that the big guys are selling, what I want to see is these kind of volume spikes at the tops. But we're not getting that. We're getting them again on the drops here, where demand is showing up, which is them, right? That's what I'm kind of looking at there. Let me see here. Let me kind of catch up with you guys. Let's see. Let me kind of catch up with you guys here. Just seeing, I think I might be missing some of y'all here. I'm trying not to. I'm trying to get everybody. You guys are talkative today, which is great. It's great, you know. I just want to make sure I'm not missing any of your questions here. You know me, I try to answer everything I can. So yeah. Any thoughts on the LME halting trades on nickel? Nickel up 250% in 2 days there. Yeah, it was crazy. I think like most of the other things, though, it looks like it may be topping out there. Now nickel, if you guys don't know, it's used in things like, of course, batteries. I think you guys know that, but you may not know that it's used in stainless steel, a few other things. So yeah, and Russia, I think, is the top. I think they're the third largest producer of nickel in the world. Something I'd mentioned before was that Russia is this, when it comes to minerals and oil and natural gas and all this stuff, it's up there. It's up there in the top 5, often up in the top 3. So, sanctions on Russia means less of this sent out, most likely, which is why people then buy that fear, and run into it. But often these heavy spikes that we see, like we saw in gold and we saw in silver and we saw in oil and we see in wheat and we see in nickel, most often denote that we're at or near a top rather than just beginning to move. It's that fear buying going on there, that FOMO in, because of the fear that it's not going to be available kind of thing, so the prices are going to go up. Yeah, so, that's kind of what I'm looking at that, as far as all that goes, really. Let me see here. Would it be fair to say that when volume was coming in at those bottoms around 30K, the economic outlook for the world felt a lot different? Would high volume at the lows in the summer of 2021 be as significant now, with economic outlook so uncertain as a whole and money trending toward more risk-off assets? Or am I just pushing my own bias into everything? Well, again, guys, remember, I generally don't read the charts based on what the what the news headlines basically are right now. Okay, so I tend to read the charts more holistically, based on the larger term trends and whatnot. Which is why I can't guarantee that price is going to go up here. Right, we're looking at it as a rally, as an accumulation of rally for the reasons that I've mentioned both here and via Elliott Wave. Right, but again, the one thing you have to understand is there are no guarantees in trading, right? So you have to continue to watch it and see, does it continue to play out in that manner? That's what you want to see. Does it continue to play out? And so one thing you can look at right here in this area, for instance, guys, you know what? You guys don't realize how much real education I give you guys on these things, and how expensive it would normally be to get this. So just pay attention, okay? But what you see here, see this big bit of volume that comes on down here? And then you come in again, you got your volume again picking up right here. So you've got your big volume here as it comes into that low, right? And as you get into low, of course, you get a little bit lesser volume, but you're looking at that big volume coming in, and then you're looking at that volume right around that same area here, right? And notice that it's less. And so what that tells you, remember, volume is a product of supply, okay? And what I mean is volume is going to increase when supply increases and demand increases to meet that supply, okay? If supply doesn't increase, then demand doesn't really have to show up too much for price to move up, right? But when you're getting to these lows here around these same levels and you see that volume's dropping off, what that tells you is there's less supply being sold into. So there's less demand that has to come in to pick it up. And these are a lot of the things that you're generally looking for when you're getting your drops to these same levels, right? So your first drop over here, volume's way up here, right? Your next drop, your volume's right here. You get over here and your volume's about the same as what it was there, but then you get into this drop right here and it's lesser again. So your volume on these drops around this level here are kind of rolling off. So less supply is being sent in at these lows, so less demand has to show up to push it. You got that? If you don't, just replay this video after it's uploaded and everything, and until it makes sense. This was one of the hardest things it was for me when I first started learning volume or price action analysis to really kind of lock my head around. Was this, how does volume, because everybody used to, when you first come in, you might still hear people talking about supply volume, demand volume. It's just volume, guys. It's the number of shares that are being bought and sold. The only difference that changes is the buying or selling market orders, or are they limit orders? Market orders are your aggressive orders. Those are the ones where people don't wait. They buy right then or they sell right then. And that can kind of tell you what's going on with the market right there. Your limit orders are the ones that are just sitting there waiting to be hit. Okay? So that's the only real difference in what's going on with volume is it market orders or is it limit orders? But for every, you can't say it's, it's buying volume or selling volume, because for every sell or for every buy, there's somebody on the other side of that doing the opposite. You can't just have a sell and no buy, right? In order to sell that, you have to have somebody buying it. So yeah. Hey, Andrew, man, I appreciate you, buddy. Thank you. Do I find using log scale more often or regular scale? Bitcoin mainly as cash. I pretty much live on semi-log. Again, the big argument for that is semi-log gives you a realistic view of what price is relationally. So again, I always talk about how 10% of $100 is $10, but 10% of $1,000 is $100, and 10% of $10,000 is $1,000. And so we don't get in when the price is at $10,000 saying, well, we want $10, right? We say we want 10%. So 10%, if we're buying at $100, 10% is $10. If we're buying at $1,000, it's $100. If we're buying at $10,000, it's $1,000. So semi-log charts help make that, give you a more realistic chart on how we normally see it. And so the worst thing you can say about logarithmic semi-log compared to arithmetic, which is what you're referring to as regular, is that on small changes, on small price movements, semi-log is pretty much the same as arithmetic. But on the larger movements where you need a more realistic understanding of what's going on with human buying and selling, whatever, arithmetic totally throws it out. You can't make heads or tails of that. You got these big, huge moves and whatever, which may not be as big, because again, when you're looking at the market, you're thinking in terms of it relationally, right? Where are we at compared, what are we looking to do compared to where price is now? Not just we're just looking to make $10, right? We might be looking to make $10 at $100, but that's 10%. At 10,000, we're looking to make a bit more than $10, right? So yeah, that's the way I would understand that, or explain that. Let me see here. Yeah. So if sell volume is lower coming in, if you've got less selling going on, you're going to see that volume lower because the demand doesn't have to show up to suck that up, to accumulate, right? It can only accumulate what's coming down on it. So yeah, so you'll see what you're looking for is when you're getting to these areas these areas at the top here, you're looking to see, is your volume increasing or decreasing as it's getting there? All right. And so on the bottoms, generally you want to see your volume overall at these lows kind of decreasing. And if you can also get higher lows in the process while volume's dropping off at those lows, that's a good indication that you've probably got a reaccumulation going on. Now, again, as I said, nothing's guaranteed. And so often you might see a spring or, bigger yet, a large volume with a terminal shakeout. And that's just if the market doesn't carry. So if you're getting something like this and the market isn't carrying higher, usually there'll be that sudden, the big players will do a sudden sell in there to get you that spring or that terminal shakeout to just kind of get the market, just kind of slap them and get them all scared. Get that supply that they've kind of just been dribbling in there that's keeping you from really moving up, to get it out of their hands into those longer term holder hands. And that way, it can continue to rally up, and you don't have that supply from retail and your short term holders keeping you down. That's why that happens. Let me see here. Duff, sure thing, man. Again, I'm not here to tell you guys that I can guarantee you what's going to happen or anything like that. It'd be silly. What I do is I bring about a quarter of a century of doing this, and my extensive education in these areas. Both standard education through school and whatever, as well as self-directed, and show you what I understand the market to be and how that's helped me trade successfully, and become a better and better trader. But that's all anybody can do. Anybody out there is trying to promise you, that they know what's going on, they can guarantee you what's going on. And I think it's just silly. We've got best guesses based on these things that we know or that we might know. The problem is the really silly people out there are the ones that have the sound bites, and they think that's their proof that it goes on there. I actually posted you guys might have seen this. Let me show you here. I posted this quote here. Oh, let me see if we can get it over. Here we go. Right here. So there's a cult of ignorance in the United States, which basically says the strain of anti-intellectualism has been a constant thread winding its way through our political and cultural life, nurtured by the false notion that democracy means that my ignorance is just as good as your knowledge. And that's somebody saying, well, we're all entitled to our own opinion. That's what that is. That's the idea that my ignorance is just as good as your knowledge. That's pretty profound, isn't it, guys? I mean, that's pretty significant there. Think about that next time you guys are maybe talking about something that you don't really have any real education in. You just like sound bites. Be honest with yourself. God, people are so scared to be honest with themselves. It's crazy. But be honest with yourself, and then you don't go and act like the fool out there, right? And trust me, there's more than enough people out there that act like fools on social media. You don't have to be one of them, guys, okay? So, yeah. Oh, by the way, guys, in case you're wondering, Scott and I are working on getting together one of these days here, probably, hopefully next week maybe, where I'll be a guest on one of his little podcasts. One of his podcasts that he does. I did not mean that like that as it came out. Yeah, I know he's very successful in what he's doing over there. Very proud of him and what he's been able to do. So, yeah, so I'll be on that. I'll let you guys know when we kind of lock down a date and time on that as well there. Now, the question was, why don't I use, let me see here. Why, when you talk about volume, why don't you use the chart with the biggest volume? It's almost 3 times the size of Coinbase volume, because it doesn't matter. I see a lot of people out there trying to add in all this combined volume nonsense and whatever. Guys, I have been doing this in legacy markets, Forex markets, commodities, metals for 25 years now. It doesn't, this whole silliness about combined volume, it's just nonsense. All you need, because you don't have it where Coinbase is going to go up $1,000 and Phoenix is going to drop $300. You don't have that. Now, there might be a discrepancy, and sometimes when price really moves hard, that discrepancy might be a few $100 between Phoenix and, Coinbase or something like that. But in general, they're going to do the same thing. The markets move the same way. Just use the charts you're on, guys. Stop worrying about what some other chart says. It makes no difference which chart has the most volume. It makes no difference. All you're interested in is that volume-price action relationship. That's all. It has nothing to do with who has the biggest volume or using some silly combined volume nonsense or something like that. All right? So that's my answer to that. Let me see here. When I look at the monthly volume on Binance from May 21st until today, it's really straight line down. All right, let me see. I want to look at some other charts here, guys. Let me see here. Let me just do this, I guess. Copy. Whoops. And let's see here. You said Binance? Let's see if I can see what you're talking about. There we go. Binance. And you said monthly. Do you just mean this volume dropping off like this? Do you mean this is the line down here? Yeah, if that's what you... Oscar, yeah, I'm sorry that you don't understand what I'm saying here, man, but it doesn't matter who's the largest. All the exchanges, the price is at the same place, right? Look, at Binance right now, price is $38,841. At Coinbase, it's $38,833. It's within $10. The price action is the same, right? The price action, this right here, the structure is the same, right? And they have different bits of volume. But the price is the same. The price action here. So it doesn't matter which one has the most volume. That makes no difference. It doesn't exert more force on the market. Remember, price itself is a product of all these exchanges and all these other things, all together averaged in, basically. Usually the liquidity, the market makers use a algo that's based on, that has an index, which is based on like usually it's Coinbase and a few others, as far as what price they're trying to mimic as it moves. And that's how that works. They provide more or less liquidity to keep that price around that, what they're getting at there. So yeah. Okay. I hope that makes sense. But yeah, I know. I understand. I understand what you're saying, Oscar. You think, okay, there's more volume there, so it's more important, but it's not, because the market itself is not Binance. The market itself is Binance and Coinbase and Femix and FTX and FTX US and Binance US and OKX and HIT BTC and KuCoin. It's all that together. It's also the CME. It's all these different products, futures, options, spot. All of that contributes to the price. Nothing leads anything. Nothing is determinant of it by itself. Okay, that's the biggest thing to remember with that. Let me see here. Okay, yeah, let's go on here. The DXY here. Here we go. Look at that, guys. DXY continuing to rally up here. We're sitting about 99 right now, almost 99.1. We're looking for a breakout above 99.323, and that should give us an expected wave 5 of 5 target up here around 100.5 almost. Now, I get a lot of crap online from people, right? But this is what I said was likely the bottom here. We came back here. I said, as long as this holds, we're going up above and continuing higher. It has done everything it's needed to do and continued way up here. So everybody's screaming hyperinflation while the dollar's value rises. Why is the dollar's value rising? Because there is demand for dollars. That demand continues to increase. Doesn't matter that during this time you print however many dollars that you printed, because clearly demand is outpacing that. And we get that demand again from from dollar creation through banks, right? When they give out loans, when credit's issued, stuff like that. That's dollar creation, more or less. You can look at something like the repo markets and how that's used. Boy, guys, there is so much I can't even go into right now. But basically, the way that was found out back in, I guess, the 90s or so, the way in which the repo market was being used to create basically forms of currency of the U.S. dollar. It was just a way to where companies could actually take that what they had, stick it with the reverse repo, which was overnight, right? And then they could actually loan out against it, not just once but multiple times. So you have your one bit of collateral that you have that you're putting in repo, right, or reverse repo, doing all that, right? You're getting the interest on that when it comes back to you. But in addition, you're able to then loan out against that, not just once, but multiple times, creating excessive more dollars, right? So you go, oh, look at all this that the Fed's printing, whatever, and yet it continues to go up. The Fed print all that money to begin with back here in 2008, right? Back here in 2008. Where are we at? 2008, 2010, this area right here. I guess it was 2010 is when QE started, right? All that money started being printed in this area here, 2010, 2011. What happened? The value of the dollar rose. It drops right here. This is March of 2020 when we had that drop right here, right? Fed kicks in all that printing again. Look what happens. Continues to rise again. So maybe, just maybe, there's something more than simply printing dollars that means anything, guys. Sadly, no matter how many times I say this, people online don't want to listen. They're so stuck in their sound bites. This is what I'm trying to warn you guys from. Don't be a part of that. Don't be so caught up in your sound bites of what you think has to happen, especially in a subject matter in which you may not have any, extensive education in. But even those with extensive education still can get it wrong, right? So when we talk about things like the euro dollar market, even those who work in international monetary finance and stuff like that, most of them don't even have a real good grasp on what's going on in the euro-dollar market. Nobody knows how big that market is, or how much bigger it's getting, or what that real demand is out there for it. It's nothing that the Fed can control, because it's all dollars held offshore, right? So, yeah, I mean, there we go. Let me see here. Yeah, I think we'll continue to head higher there, Andrew. I think we may be coming to some, I mean, like my count here has this as a 1-2 heading up, right? So, I don't know. I've got that little bit local count, which may be changing things a bit, but, you know, if we look at this maybe as a 1, 2, 3, 4, 5, or coming up to a 5 here, or maybe 1, 2, 1, 2, 3, 4, 5 gives us 3, 4, 5, you know. Right here, this 99.667 kind of area, if this is a 1, 2 here, that's a minimum expected wave 3. You know, again, it just depends on how this counts in here. This is a pretty significant pullback, though. This is, you know, from this point right here, it's a 50%. So, you know, again, as we continue this up, I think the market continues heading higher here. I don't see any reason for it not to at the moment. You can see right here on the daily, we're pulling back down toward oversold again on the Stochc RSI. Got room up here to go higher on RSI, right? Your 3 days getting up there, though. Your weekly, look how much room you got on the weekly still. On Stochc RSI and RSI. Now, here's the thing. I've talked to you guys about pivots before. Look at this. And the one thing I told you was, you know, if you get this move in sideways between the pivot and the R1, and it doesn't get reject the R1 and retest the pivot, but instead it continues up to the R2 or R3 before it pulls back, most often that's going to be that tells you the market's extremely bullish, and you run through the R5 pivot. So we've got that happening right here on the daily. We may have that happening right here on the weekly as well. If we get this to rally on up here to that 100 area up here around R2, man, my expectation is probably just to pull back to R1 here and then continue up higher and rally up on through. 5 pivots there. Up, it's 115, 116. And I know everybody goes, oh, no, that's not going to happen. That can't happen. But don't forget, guys, those of you that say that are most likely the same ones who said when we were down here that said, oh, no, it's not going to go up to 100 plus. And we're knocking on the door right now. We hit that 99.418 right there so far. So yeah, you know, again, I think, you know, the demand for dollars continues, which is causing this liquidity crunch, which is causing a greater demand for dollars. We keep doing that. The bounce on the R1 on the DXY daily was strong. RSI, though, looks high. Maybe a cool-off soon. Yeah, I think we'll have some kind of interior cool-off, some kind of interior pullback. And, you know, if we're hitting that 100, 103 area, I think we pull back maybe 96, something like that. Maybe even, yeah, this area right here, 96, 98, kind of this area, maybe. See this wick right here? This wick goes from 97 here up to 97.7, 97.05 to 97.735 or whatever. I mean, I think that would be a good target. Secondary would be this demand block right here. This would probably be a really good one here, this demand block. So that's 97 basically 97 to 96 and a half. That would be a real good area, and we can see that's right there, actually right there on the daily pivot as well. But I don't usually expect to see a rally up to the R2 pull all the way back to the pivot. So it's going to depend on what happens here and how much push we get through this. Kind of see what happens there. But, you know, I would expect it to stay above that daily pivot. For right now anyway, it's only the 11th day of the month. So that daily pivot is going to sit there through the end of the month. Generally speaking, is the stock market, Crypto Macan, what's going on? Is it going to perform worse when the dollar rallies, right? Generally. Yeah, because again, if the value of the dollar is increasing, that means it's becoming more expensive to pay your debt. And what has happened over the last few years with debt? These companies we've talked about it here consistently, right? The companies have taken out just ridiculous amounts of debt. Well, that's great as long as the value of the dollar is going down. That's the whole idea of a debt-based economy. You take out debt to pay with cheaper dollars in the future. The problem is when you get deflation, when you have the value of the dollar continuing to rise, that makes your debt more expensive. Now, instead of being able to be nimble and to do different things and to, to take advantage of things that you might be able to normally, with your market, you have to spend all your extra money servicing your debt. So you don't have that money to do all that. And then, so and if the economy is coming down, well, then you start laying people off. You can't produce as much. So you start laying people off. So you have people out there now who are losing their jobs who aren't spending money. They're trying to save it as much as possible because they don't know when they're going to get a job. They don't know if they're going to be, those who still have jobs don't know if they're going to be fired. So they tone back their spending. And so they're hoarding those dollars. When you hold the dollars in your bank or something like that, it's deflationary. It's disinflationary at best, deflationary possibly. Because those are dollars that are no longer circulating. Everybody kind of touts the M2 money supply. The M2 money supply is not even correct. Again, when you look at the euro dollar market, that's not involved in that M2 money supply. So you can't even use the M2 money supply to gauge what's going on, right? But you can definitely look at monetary velocity, and you see that velocity has been dropping since the 90s. Which means money is not getting churned. It's just sitting there. So if it's just sitting there, it's not on the environment, which means it's not chasing the same goods. And if the people need dollars, they can't get their hands on those dollars. So the Fed, this is something I've talked about with you guys before, the Fed has to print more dollars. And that's very oversimplified, but the general idea. If you're holding dollars in your bank or in something in some asset, and you're not selling it, those dollars are just sitting there. If there's a demand for dollars and they can't get their hands on that dollar, that means the liquidity of the dollar is shrinking up, drying up. So what we look at, I had told you, I probably did this a couple months ago with you guys, but I showed how we have the increase in money supply, but the decrease in velocity. And so the increase in money supply was just making up for that decrease in velocity. For what I just said there. Because if you got the money sitting there and it's not going anywhere, but people need the dollars, you have to print more. Right? Yeah. Why would we think that Link USDT is dead? Let me see here. Let me see. He's kind of catch up with you guys here. What do I think about this scenario? Let's suppose that in the near future it will be unveiled that USDT isn't backed 1-to-1 by USD. Well, we already know it's not. There are chances that one USDT would value, let's say, 50. No, we already know that it's not. We already know that actually most of that is like corporate paper backing USDT. Yeah, we already know that. That's the information they already gave to the New York Attorney General's office there. After that whole thing they went through and they have to report every so often to them. Yeah, they already showed it that. Remember, and I talked about it here, and I said, well, the thing is, we don't know what paper they're using. The problem is, what is the quality of that paper? Because if you get into a crunch where you need to sell it, and that's some cruddy paper, it's going to be really difficult to sell for. So all of a sudden, the value of your reserve is not what it was, right? It becomes more difficult to sell that paper. If it's good paper, it's not so bad, if it's good, solid companies backing it. But, let's face it, it's Tether. It's probably Phoenix or something. Phoenix paper. Corporate bonds. From Phoenix that's backing, that's there as the reserve. That wouldn't be good. The dollar is backed. The dollar is backed by the full faith and of the government. So basically, the dollar has a reason for being because it's required. Again, to pay tax, to pay U.S. tax, you have to pay in dollars. To pay U.S. debt, you have to pay in dollars. Dollars are also, again, the reserve currency of the world. So the dollar is backed. Now, does that mean that, it is fiat? Yes. So does that mean it's physically backed? No. But this nonsense that people go through with this, oh, it's not backed. It's just nonsense, guys. Any country that issues its own currency and requires that its taxes are paid in that currency, give that fiat bite. USD just happens to have more so because, again, of its seat as a reserve currency. So make sure you guys understand that. It's not as simple as, oh, it's unbacked. Water's wet. What do you mean? Again, because there is a use for it, a requirement for it, it is technically backed. You have to use it to do certain things, certain big things, that use a lot of it. But then again, like I said, even more so than that, it is that whole reserve currency thing. I think everybody thinks of reserve currencies as a simple little thing. Oh, it can just flip. No. No, it greases the wheels of just about every transaction internationally. It doesn't just change overnight. It's something that takes time. Because it is so intricately involved throughout the world in international finance. Let me see here. Yeah, the paper could just be really trashed. And that was my fear. That's what I mentioned when we first heard about all that, was the idea, again, that maybe it's backed by like Phoenix paper or something. And, I would much rather it be backed by something like, I don't know, Apple. Some kind of big, strong behemoth company like that. Which still doesn't guarantee anything, but you're a lot, if you're holding paper from Apple, you're a lot more likely to be able to sell it when you need to for, its face value than, say, if you're holding paper for, I don't know, BitConnect. Not that Bitfinex is BitConnect, but I just mean, there is that difference in the quality of the paper, and we don't know what the quality of their paper is. So yeah. It's a pretty big thing. I don't know what big effect that would have on the market overall. Right now, we've got so many other, back in the day, years ago, when there weren't so many fiat on and off ramps, I think it was a much bigger deal. I mean, we would still feel it, I think, at least knee-jerk reaction, if it was to come out that, that they, if there was a run on USDT is what it would have to be. But with as much how common it is to have these fiat on and off ramps now, I don't think it's nearly as big a deal as it used to be. Yeah. I'm kind of getting to that point, I think, with it. Let's look here real quick, guys. Do a lot of talk about different stuff today. Let's see here. Let's look at the NASDAQ composite. There we go. I've got this potentially as a 1-2 here, looking for a breakdown below 1279.64. And if we get that, that should give us a minimum expected wave 3 down here at about 11,420. Again, bigger picture. There's this drop here. So, coming down 1, 2, 3, 4, looking for a 5 there. But then we should get a good rally up. And that would be your chance to maybe go long on a few stocks for a short bit of time, guys. Once we kind of get down toward this low here. I think, that daily pivot kind of does a good job as a target, depending on how long it takes to get down to this area. Yeah, see right there's 50%. So this kind of area right here would be the target that I'd look for. Again, it's just wave 4 of the wave 4 here is where it's at. Let me see here. S&P E-minis. Let's see here. Again, looking at locally here, what do I got here? I've potentially got, again, the top back up here. We talked about this before, beginning of January. We've got a 1, 2, 1, 2, and then of 3, we're working on 1, 2. Looking to head down here in 3. Looking for a breakdown below 41, 48.25. If we can get that, that should say then that wave, parentheses 3 here is in progress toward minimum expected target of 38.20.5. So that's what I'm looking to break down there. And of course, we jump here to the Dow, which has the least tech of the least amount of tech dominance in its thing as the other ones. Possibly done here. Maybe 1, 2, 3, 4, 5 is leading diagonal for A. We got B, 1, 2. It's possible it could be 3, 4, 5. It's also possible it could be 1, 2, 3, 4, and a little bit higher up here toward this pivot area, the top of this purple supply structure around 33,642 or so to finish it off. But nonetheless, we're looking for a breakdown here below 32,819.76, and that should get us down here minimum, wave 3 target around 30,839 or so. By the way, these are looking like third waves setting up to come down. So if these are third waves setting up to come down in these, if they happen to be, these should be big impulsive moves down with that. Let's see here. Let me see here. You wonder what are the details of Arthur Hayes' plea deal? Yeah, don't we all? I definitely wonder as well. He says they made him pay $10 million and reduced sentencing from 10 years max to 6 to 12 months tops. Yeah, honestly, I haven't even been keeping up with him and what's been going on there. I'd be interested to know though. Let me see here. Hank says, don't forget that all the players in the game have a vested interest in keeping USDT alive. In many ways, it is backed in the same way as the USD. I wouldn't say the same way. Because again, remember, what I'm saying here is the USD has a legal requirement for its use. You cannot pay U.S. taxes in anything other than U.S. dollars. It has to be. There's nothing else. You can't pay it in treasuries. You can't pay it in Bitcoin. You can't pay it in, rubles or rubles or anything, right? USDT, yeah, there's some big players that may want to keep it afloat, but that's not the same as there being a legal requirement to do it for that backing. And again, it's just me, man. I'm just really particular about language, and how we understand things, because people in general tend to be very lazy in the way that we process language. I'm guilty of that as well, and I really work on it a lot, but I'm still human. So I think it's important to really kind of be as I don't know, as good as possible with that language. I don't know, it's weird. It's really weird, right? That we're so lazy with language. And language itself is just so imprecise already. And then we're so lazy with the way in which we take it in, as well as the way in which we use it. Which leads to all these misunderstandings between people, which at higher levels become, wars and whatnot. Not that Russia and Ukraine is a war based on misunderstanding, but just that, it can tend to lead that way, right? Yeah. So yeah. Telluride says, we're a dying breed. People don't read books and they communicate with their thumbs now. We really do. It's funny, you say that because, again, I've got that master's in psychology, right? And so one of the papers that I wrote, I think it was in my social psychology class, was on was basically on this kind of subject with social media and how social media is going to change the way in which people communicate and understand, and not in a good way. It's going to become less specific, more generalized, which means more issue for misunderstandings, which means to likely increases in mental health issues. Yeah, so it's funny you say that. It was 10 years ago I was writing that paper. And here we are today, and it is exactly what it is, right? And, again, the same thing I talk about with sound bites. Be careful with those guys. Nothing I say here, y'all that are coming here listening, I don't say anything here to make any of y'all feel bad or to be disrespectful to you or anything. When I say something here, if you're feeling hurt by it, check and see if it's because you're actually doing that thing. My goal is to get you to recognize that you are, because most of the time we don't. And again, this comes back, I've got that whole master's education psychology. So, this comes from that, this idea that the world needs more seeking to understand and more seeking to be clear about what we say rather than what it's gone to, which is a very generic kind of form of, you know, thumbs up, thumbs down kind of communication, sound bites, memes, that kind of stuff, right? So much of that, man, reminds me of, no, I'm not going to say the movie. I think you guys probably know what the movie is. Oh my gosh. But anyway, Luke Wilson's in it, I'll tell you that much. Let's see if any of y'all can figure out what I'm talking about with what I just said in that movie. Who's in that? Yeah. Yes, I'm using TradingView for these right here. Yes, sir. Oh, yeah, Hank. Yeah, communicating at 240 characters on a chat is not where you can shine. Not for you, not for anybody else. It's really difficult. I tend to be a bit verbose anyway. It was hell on my political theory professors as an undergrad. But I learned not to be as verbose. But, you know, they force you to do that when you're taking those philosophy classes. So, crazy times. So anyway, yeah. So, you know, here we go with this. I mean, really, we're just range bound right here. So we're just looking for a breakdown and continue down. Obviously, if we break out above, you know, and with the other ones through that second wave that's a little bit higher up, that's going to invalidate it, and we'll have to take another look at it then. But, you know, that's kind of where we're at with it. Oil, you know, again, oil, man, big move down off this swing high up here, right? We're up here around 130, I think is what that was. Let me see. 130 and a half, yeah, WTI here, West Texas Intermediate crude, right? And so now looking at, you know, what we may be going on here, looking at, it looks like it's popping up a little bit more there. May look more like this. But the idea is we want to see a reversal prior to this here, because I've got this as a 1, 2, 3, 4. And then we get potentially a 5 down here, you know, maybe down here around 90. Wave 3 is going to be right there around 94.5, 95. And so, you know, a breakdown over here below this swing low, this would be, with this moving up, making a little bit higher high, this should be an A and a B and a C. So a breakdown here below B, which is $104.89, should indicate that we're heading down here for wave 3 to around 94, 95, 94.5, 95, right there. Depending on if this continues rallying up here, how high. If it continues rallying up there, this will kind of move up a little bit, maybe to 95.5 at that high volume node. But nonetheless, looking for that breakdown there. The only thing that changes that, of course, is if we break out above wave 4 here. And in that case, we'd have to again take another look at it and go, well, what's maybe going on here? So yeah. Idiocracy, look at you, man. You're so awesome. I wasn't sure anybody would get that. That's awesome. Lewis Winthorpe III there got Idiocracy. That's the movie I was talking about. Let's see. What do we got going on with silver here? Let's see. Silver. Again, silver topping out so far up there at around 27.495. Looking at maybe, again, same idea. We might have a wave 4 printing here. Right now with all sideways, if we continue just going sideways here, it may be A, B, C, D, E, so a triangle. Get us a wave 5 down here. If it's a triangle, we might only get down around 25.2, 25.3. If not, we're looking for it to come on, move down here to the weekly pivot area right around 25.095. But again, that'll give us, we just need one more breakdown below wave 3 here that gives us 5 waves down. What that means is 3 up and at least 5 more down, A, B, C at least. And potentially 1, 2, 3, 4, 5 as a 1, ABC up as a 2, 3, and in that case it heads on down there toward, you know, $10, $8. So, yeah. Only thing obviously change anything is if we're breaking out really above wave 2 up here. If we break out above wave 4, we could say maybe wave 4 is still taking a different form here. But breaking out above wave 2 will definitely lock this in as what appears to be 3 waves down. You know, I was looking at this as maybe, you know, 1, 2, 3, 4, 5. So maybe like a 1, 2, 3, 4. But then I've just got a 3 here. The only way we could do that is maybe this would be a 1, 2, 3, 4, 5. We get 5 there. So this could be a wave 2 going up here. But definitely looking for, you know, a breakout above wave 2 is really, puts you really cautious. At that point, we're probably breaking out higher there. But as long as we've got 1, 2, 3, 4, and we break down one more here, that gives us 5. So yeah. Let me see here. Gold, same idea. More or less. It's just not up as high there. We are in our 5th wave down here. So 1, 2, 3, 4 is a flat. And then working on 5 here. I think we've still got a little bit lower. I mean, that could be 5 there. But I think we got a bit lower. In either case, wave 2 is an initial target up here of this wave 4 area. Right around $2,015.01. Quite possible. If this is topped out here, this is a double top then from over here. Back in 2020. Right? So very possible double top. And it should head down then. Obviously, if it is end up being like a double top, that breakdown of the target, maybe break down below this low over here at about, let me see, 1673 and 30 cents. Gives you a double top, target there of 1339. Usually pattern targets are 3rd waves. So we head a little bit lower into that, and guess what, guys? All of a sudden, we're looking at that higher volume node, that high volume node right here, that 12 to 1300 area. Remember, I told you that's the first target. If we break down through that, then we're looking at potentially 900 to 1,000 kind of area. So, but we could get, this is such a large node here. That could be it, and it could end up being a I've got this as a flat here, right? So A down here, B up here. If C is right there, then it could be a running flat. We head up higher there. If it breaks down below that, again, then we're looking at an expanded flat where it drops below this 2016 swing low over here. Oh, I'm sorry, 2015 swing low over here. Would drop down below that. Like I said, probably get to that 850, 900 area. Something like that. But, again, that's a far way off. We got to see what happens here. As far as the daily goes, huge outside bar, bearish engulfing, and we just want to see some follow through now with this. But that's a not a good sign right there. It's a big move up, and that's on your high volume. And then it completely flips. You go from demand in charge the next day to fully supply in charge on less volume, much larger candle spread. Flips it completely. So we look at some attempts to keep some support here, but I think overall it fails and we head lower. Continue down with that. Let's see here. Let me see. I think I answered your questions there. But yeah, so there you go, guys. I mean, that's kind of, the things of what we're looking at here. If you're wondering why the Aussie dollar is falling off against the USD, again, one is the USD gaining in value. 2 is the Aussie is a commodity currency. And so, when you're seeing oil you're seeing gold and silver and stuff like that rallying, it's going to be a benefit to the value of the Aussie. But as you saw, those kind of dropped off there, and so boom, pulled back. Same thing with the Canadian dollar, the loonie. It's with oil. If oil's rallying, that gives strength to the the loonie. If it's pulling off, then the loonie loses strength. And in that pair, of course, USD is still gaining strength. So, that's why those things happen there. When it comes to the forex market, as far as that goes. So there we go, guys. Okay. Listen, I am, as usual, I'm long on here, but I really, I just really appreciate you guys showing up. Like I said, I'll be on Scott's thing sometime here. I think we're trying to get next week sometime. So I'll put it on the tweet there and through our other social media as well as in Discord, whenever that is. And I'm sure he'll grill me about some stuff, and we'll see how much fun that is. Maybe I'll have to just storm off, right? Headset off, throw it down, storm off. Nah. But anyway, that should be a lot of fun. No matter what you think of it, for whatever reason you may think it, the truth is he does great podcasts. And so, you can hear from a lot of the big movers and shakers and people that are doing things. Now, that doesn't mean they're always going to be right, guys. There seems to be this big kind of default to, okay, they've made a lot of money, so they know what they're talking about. That's silliness. Compared to most of y'all, I've probably made a lot of money. So why not defer to me, right? But, oh, he's made more money than you, so he's better. No, silliness, guys. Authority does not come from the money you make, right? But there's a lot of information going on there, and if you're trying to, especially if you're trying to keep up with what's going on with crypto, I think it's an amazing podcast to listen to because he often talks to those people who are building in that market, and that's a good metric of what may be going on, over time, right? The health of the market overall is based on that building, a lot of it. So anyway, guys, there you go. Listen, so if you're in Discord, I'll see you guys here in a bit. If you haven't joined us, man, I don't know. I'd be hard pressed to believe that that even 1 month put in there is not going to, just put you so much further ahead than anything else you're going to get out there, whether it's free or paid or otherwise. I spend an exorbitant amount of time helping members who want to, who ask questions and whatnot, and trying to teach everything that I can as far as markets go. But a lot of what you learn, guys, just like at any other point in life, it's letting go of the things that you think you understand and listening, being open to the possibilities that maybe things are different. And so, if I could tell you one thing, that would probably be it, right? That would probably be to just kind of, really always be open to understanding things that especially if you don't particularly have any real education in that particular subject matter. Yeah. So there we go. We'll see what happens with Bitcoin here. We'll see if we can get that rally up and through. Would be absolutely fantastic because if we do, that says, hey, we're headed up, 55, 57 probably in terms of the triangle. And then we'll pull back in 3 waves, probably to around 48 or so. And then that'll complete the triangle and then be off to the races. But that's still a long way off. We've got to get through this local area first and see what's going on there. If I don't see you guys over in Discord, I will be back on Tuesday, 11 a.m. Central Standard Time, and hopefully we'll see you guys there, okay? You guys have a fantastic weekend. Trade safe, be safe, and do me a favor. Get out and get away from the charts while you can. That doesn't mean you get out and you look at the charts on your phone. Get away from it for a bit. You'll be amazed at how much clearer things seem once you do. All right? Don't forget, the only thing you control in the market is how much you lose. So please keep working on risk management, and I will see y'all on Tuesday. Take care.